Want to understand Boiler Room? I was a Wall Street analyst when this movie was made, and I'll explain what's going on. And stick around till the end of the video, because although phone-based boiler rooms don't exist anymore, there are modern versions on Twitter and YouTube for crypto and proprietary trading that I'll explain. Let's get into it.
I'm invested very heavily myself, and we just stay put.
I don't know if you ever had the opportunity to purchase IPO before. We have this company that's going to...
A legitimate brokerage helps buyers select and buy stocks from other investors. In the Boiler Room, they're selling stocks that they own. A legitimate brokerage charges small fees and captures the bid-ask spread on transactions. The bid-ask spread is the difference between the amount that a buyer will pay and a seller will accept for a security. It's usually for high volume stocks just a couple of pennies or even fractions of a penny. In the Boiler Room, they've bought junk stocks that don't trade for pennies and they're selling them for dollars. The margin is huge. Now this isn't spelled out in Boiler Room, but you need to know that there are over 12,000 stocks in North America, and the vast majority of them are for defunct, worthless companies, and they don't trade anymore. They're not listed on any exchange with centralized prices. They're unlisted securities that trade over the counter, meaning it's a transaction between two parties, a lot like buying a used car. The only difference between buying a used car and buying an unlisted over-the-counter security is that the buyer, at least when they buy a used car, knows they're buying from the dealer. That's not the case at JT Marlin or in the Boiler Room. Everybody wants to make money fast, but it's risky. I think investors should be patient, get the market return, and focus on keeping their costs low. That's a very sure way, I think, to over time beat other investors and build wealth, but not at JT Marlin. Those people want a quick buck, and to do that they need a stock with a catalyst. That's an event that's going to change the price of the stock. In this case, the pump, which is the lie that temporarily inflates the price of the stock, is that Farotech, which is a company that supposedly has a drug for prenatal babies, is on the verge of FDA approval.
The pharmaceutical company Farotech has a drug called Paratin in the third stage of FDA approval.
FDA approval does often result in a quick and positive adjustment to the price of a drug company. So it's a plausible story. And JT Marlin creates the illusion of investor interest by pretending that there's tons of people to call and there's a huge amount of people who want to buy the stock. And they also typically trade back and forth among related parties a small volume of stock to paint the tape, to create a false record of a rising price and volume. And that's why the pitch works. The sucker can see that the price of the stock is rising, see that there's volume, hears a plausible story about a catalyst, and thinks they know what's going on. But it's all a lie. It's all an illusion. And as soon as JT Marlin has unloaded the stock onto the suckers, there's no reason to continue, and the news stops, the volume dries up, and the price drops. That's why these people are called bag holders. They're left holding the bag, which has nothing of value in it. And this still happens today, maybe not in a call center, but there's 23,000 crypto coins out there. Many of these coins are traded back and forth among related parties to create the illusion of value, to create a market cap, which is the number of coins issued times the price of the most recent transaction. Now, to believe that this value exists, you'd have to believe that every single coin issued could be sold at that price. And it's just not true. That value is not there, the demand isn't there. And it's not just crypto. Recently, Hometown Deli, a small deli in New Jersey, had a market cap of over $113 million. This deli had revenues of just $40,000. People went to jail for this. Even today, the Hometown Deli has a market cap of over $63 million, but there's no trading volume. Try selling a share at those prices. Obviously you can't. It's a complete scam. And this isn't just crypto and some deli, it's also proprietary trading patterns. These are promoted on YouTube and Twitter to unsophisticated people who want to make a quick buck and think it looks legitimate. These people are claiming to trade profitably. What could be the harm? I'll send them the $20 or $100. Well, you're going to lose your $20 or $100. It costs almost nothing to reach people on Twitter and YouTube, and the testimonials are simply false. Beware. And that's why I think every investor should always ask when they invest or buy anything, how is the other guy getting paid?
You were going to make $1 million inside of 6 months.
Even legitimate brokers are guilty of this. In a legitimate brokerage, like E-Trade, you can easily pay a 1% asset fee and 2 to 3% in some cases for mutual fund expenses. That's 3%. Now let's imagine the market rises by about 7%. Well, if the market is up 7% and you're paying 3% in fees, you're only getting 4%. You're losing about 40% to fees. Now compare this again to Vanguard, where I invest. I typically pay about 1/10% to 2/10% for fund expenses, and that's it. And I think that's the only thing that's assured in life. You know, they say death and taxes. I'd add to that investment fees. So if you look closely at the true economics of Farotech when Seth is selling to Harry, it's far different than what Harry thinks it is. Harry thinks he bought a stock at 8 and the seller sold it very close to 8, suggesting that both agreed that the price was close to 8. But in reality, when Harry bought at 8, the seller was only getting 6 because of the RIP. That's the reduction in price that motivated Seth to sell to Harry. Imagine again, when the second call takes place, the price has dropped now to 5 and the RIP is 3.
RIP on Farotech is now $3.
Seth is trying to tell Harry to buy at 5. It could go to 15, but the seller's willing to sell at 2.
Don't you see, you get the same stock that we picked up at 8, only now it's at 4.
This is a huge difference of opinion about value, and it really points out how dishonest JT Marlin is.
Do you ever wonder how we make the rips that we do more than any other major firm?
When you're a buyer, you should always think about the fact that there is a seller, and there's a difference of opinion about value, and you should remind yourself and ask yourself, am I smarter or better informed than the seller? I think about this all the time, and it has made me into a cost-focused, index-oriented investor because I've made enough mistakes in the market to know that often enough, I really don't know better than the seller when I'm the buyer and vice versa. If you like this video, please check out my other videos on finance movies like Wall Street, The Big Short, Trading Places, and Margin Call. Thanks, and bye.